pieces of this hour that we're doing is that we've got both Datawatch and loyalty builders working together here. The reason that we're doing this together is that we use Datawatch a lot. We're going to show you visualizations in retail. We're all about raising revenue in retail, and that to do that, we're combining both analytics and visualizations, and we're going to show you how that happens. So I think we're going to be able to move this. Yep. Our company has been around for 16 years. We have a history of helping customers get, again, more revenue from their marketing campaigns. Could be all kinds of campaigns. Could be catalogs. Could be the web. Could be email. We focus on what we call individualized marketing. We actually predict the likelihood of each customer to buy each one of your products or product categories. And the idea behind that is more relevant messaging. We not only focus on who's going to buy, but we're going to give you quantitative numbers so you can figure out, find the best products for each customer. We do, and I'm going to get into it in a little bit later, we do both a worm's eye view, that's right down to the individual customer, and we do a bird's eye view. And when we get to the bird's eye view, we're looking from the 50,000 foot level at what's happening in your business. That's where the visualizations that Mike was talking about become so useful. We're going to show you some of those visualizations. And those visualizations are going to be a bit different than some others you might have seen because we're showing visualizations of what's going to happen, not what has happened, but what's going to happen, predictive visualizations. Our customers are retailers, that's who we expect we're talking to today, catalogers, some B2B customers, e-commerce vendors. They cover a pretty wide spread. But what characterizes each customer is that they've got lots of customers and lots of products and lots of transactions. Some of them have lots of locations too. That's not critical, but if you do have lots of locations, we're able to deal with that pretty nicely. And also, we find that we're typically used by marketers, not the IT people. This is meant for marketing folks. So our value proposition, which I alluded to earlier, is pretty straightforward. Get your customers to spend more money from your existing customers. Plus, it's simple. We try to make it really easy for this to happen. It's not hard for you to deal with. And we're going to show you how easy that can be. The strategy that we typically recommend is to use each customer's past history, their past purchase history, the transaction data that you already own to discover what products are best to offer them. And then relevant communications where you can address each customer individually. When one of our clients sends out, pick a number, 1 million emails, each email is different because we help them recommend different products to different customers. And the relevant communications really expand the response rate and expand share of market. So we're asked most frequently to tackle two problems. Cross-sell. How do I sell products to customers that they've not yet bought? That's the way you grow a business. And retention. How do I hold on to my customers? Which ones are likely to defect and which ones do I need to hold on to? So here's a slide about relevance. I don't think there's a marketer out there who will fight the notion that relevance is going to raise response rate. It raises them a lot. The two things that marketers are not necessarily aware of is how much it raises response rates. You can see from these charts where the red bars are the relevance personalized campaigns compared to the static campaigns. It's a lot. It can often be double-digit percentages, 10 times, 5 times. But relevance is really, really important. So that's one piece that people don't realize. And the second piece that people don't realize is it's not that hard to do. So the tactics that we use to do that are, first of all, customer-centric direct marketing. And I'll talk about what I mean by customer-centric. We use predictive analytics to increase the cross-sell and the upsell. And by cross-sell, I mean selling customers something they've not yet bought, and upsell is selling them something they've already bought, repurchase those things. And we also help you do product-centric campaigns so you can move some SKUs that you want to promote. And we use data visualization. We're going to show you some data visualization of retail data to manage campaigns, identify locations that need special attention, and what products might need special attention. So here's what I mean by product-centric versus customer-centric. The way we work is that the transaction data comes in, we analyze each customer individually, our computers do it, and it cranks through it pretty quickly, and we can have either product-centric or customer-centric campaigns. In a product-centric campaign, you start with the products you want to sell. For example, you might want to sell all the products from a particular vendor. The vendor might be contributing co-op dollars, and you want to find which customers will buy the products from this particular vendor. We're good at that. We do that a lot. And a customer-centric campaign is where you start with the customers you want to target. For example, customers who might be at risk of defecting, or customers who are underperforming, or customers who are accelerating their rate of purchase. Different customer populations are easy to identify, and then we look for what products to offer to them. So we believe in touching and selling to every customer, but making different offers and at different frequencies to different customers. And here's a quick schematic. What we do is we upload purchase data into our cloud. This is analytics as a service, and download target lists, the recommendations for each customer, what they're going to buy. Might be used by inside salespeople, might be used by direct marketers, might be used on your website. There's lots of places where that's used. And if I looked inside that cloud, I could see that we've got an automated analytic engine sitting up there. We've got our own proprietary metrics, and we don't need a lot of fields. We need who bought what, when, and for how much. Data that's coming typically out of your point of sale system. And you're sitting on it already. It's gold, really. And you don't have to do any data modeling. We have a saying around here, we do the math, you do the marketing. And then we put it all into a database. We build a database for each one of our customers. And we have a browser-based tool, Longbow, which lets you create marketing campaign lists, or we can do it for you. And we produce that campaign list, and you download that campaign list, and off you go. Now, those lists can be very big, and the data can be very big. But there's a difference between what we do and typical big data. In typical big data, you analyze more and more data and try to get an insight. Well, we look at it a little differently. We say, let's use the right data. We want who bought it, that's the customer ID. We don't need any personal identification. Just need an ID number. What they bought, how much they spent, and the purchase date. And from that, our math is able to produce some really amazing stuff. We can produce the likelihood that each individual customer is going to make a purchase in the next, say, 30 days or 14 days or 45 days or whatever period we decide. The risk of defection, maybe our most accurate metric, the likelihood that a customer is not going to make a purchase between now and when they go inactive. The expected value, if you send everybody a catalog, for example, we're going to get $5 from Sally and $5.15 from John. For each customer, we're going to say, here's how much you can expect if you send that catalog to those people. And of course, you know what it costs to send the catalog, what your margin is, so you can easily figure out who to send and who not to send. The resale probabilities for each customer from all your products. Which ones are they going to buy, and what's the likelihood they're going to buy it? And cross-sell for all the products that each customer has not bought. What's the likelihood of each customer buying one of those products? Now, there's a lot of cases where those probabilities are zero, but where they're not zero, that's where you can really make some money. And then we let you segment the customers so that you can address some of them by segment if you want to do that. And also, we do product affinities. It surprises me constantly. It shouldn't by this point, but many people, many companies know which products drive other products to a certain extent, but not to the full extent. So if someone clicks on your website and they don't do anything, you'd like to make another offer to them. And you need to have a product affinities table that says, if they've looked at this, what are the other products they might look at? You have a big customer set. It's important to have an affinities table, which we calculate for all of our customers. So here's what we deliver. We deliver typically 3 tables. One table, let's say you've got 1 million customers, like this top table, it's going to be 1 million records, and it's going to have a lot of metrics about each customer. The customer ID, what segment we might put them in, their loyalty rank. This is a value measurement. 100 is the best, lower than that is low. Their risk score, what's the probability that they're going to defect, they're not going to make a purchase, and pretty accurate. And we can show you back tests and actual tests to show you how accurate it is. The likely buyer score, what's the probability this customer is going to buy something in the next 30 days? And then a lot of metrics that you're used to looking at, how much they've spent, the number of orders, category score. Not too many companies track this, and we think it's important. From how many different categories is a customer buying? You find all too often that a customer can be a very good customer, but they're buying quite narrowly. You'd like to be able to expand what they're doing. And purchase delay is another metric that we invented. See if my mouse is somewhere around here. Well, here it is. Purchase delay. This is the number of purchases a customer has missed from their typical pattern. So some customers might buy once a week, some buy once a month, some buy every 5 weeks, whatever their pattern is, we can track that pretty quickly. And then when they fall off that pattern, we can spot that. So a purchase delay of 1 means they're right on pattern, and a purchase delay of 2.8 means they've missed almost 3 purchases in their purchasing cycle. So we have all those metrics for each customer, and that lets us do some interesting visualizations, which you'll see. And then the next 2 tables are the ones that are really the value. And for each customer, here we've pulled out one customer. We've pulled out customer 367-10971. And we're delivering the top 5 upsell products and the probability that they're going to buy them. This is for a mail order company that's selling this kind of stuff. And we're also producing the top 5 cross-sell products. And these are products they've not bought. This is an index from 0 to 10. If they've got a cross-sell of 7, 8, 9, especially 8 or 9 to 10, we're very convinced that we can sell them that product. So we look for customers who have high cross-sell indices, and we make offers to those customers of those products. And these tables are different for every customer. We calculate the probability that each customer is going to buy each one of your products. It's very powerful information for marketing campaigns. It's what makes them work. So here's how some people apply that. This is an example of individualized emails. Customer 1 gets these offers, Munsingware and sugar-free and for your bath and so on. And customer 2 gets a different set of offers, and customer 3 gets yet a third set of offers. Typically, we'll recommend emails going out with 2, 3, 4, maybe 5 products. Sometimes you'll send out flyers. Sometimes you can even use this material to send out customized mini catalogs. But each customer, whether it's in print or email or on the website, gets individualized recommendations. I've got a few case studies here. Some of them are companies you might recognize. Keurig, been a customer of ours for a while. They sell individual servings of coffee. And what we did, this is not really totally individualized. This is more customized. We divided their customers into 5 groups based on the kind of what we call a roast profile, what they're going to drink. One roast profile is tea drinkers, dark roasted, decaf, flavored coffees, and so on. And each one of these customers got messages that were tailored to their interests. The dollars were the same, but the messages were different. And so we talked to these customers according to what they were likely to drink. Well, the results were pretty interesting. There were over 800,000 emails were sent. There were 250,000 customers in the control group. And the control group produced, down here you can see 57 cents per email. I can show you this data because Keurig made it public. They were so happy about it, they entered a campaign, a contest campaign to see how people did this kind of stuff, and they've been public about it and nice enough to let us share this. So 57 cents if you got a control group email. But on the other hand, if you got emails that were more tailored to your drinking taste, the revenue per email shot up, $1.34 for light to medium, all the way to over $2 per email revenue. And by the way, 57 cents is not bad for emails since they typically cost about a half cent each. But let's see, I'm going to go back if I can. I jumped ahead there, folks. And I've got to get back to my slideshow. Sorry about that. So the revenue lift could be really pretty high because the relevance made it more attractive for people to open their email. And you can understand how this kind of money, this kind of lift can drive your results. Here's, I'm going to get to the next slide, I think, in a moment. Yep. Here's a different case study. This is a cataloger that sells nutraceuticals, and they were worried about how they would do individualized emails. And what they did was they did a really simple piece. They took their normal email, here it is on the left, and they shrank it. This is the template. They shrank it to about 2/3 of what it was, and they left space around the margin. These are just templates, placeholders, where they could put in products that were particular to the recipient of the email. And here's just one campaign, one set of campaigns here. They saw a lift of 43 cents per email by putting in individualized offers to the campaign. And it delivered lift of over $300,000. This is maybe my favorite one of these examples. It says up here now into its third year. It's actually now into its fourth year. I'm a little lax in getting the slide updated. But this is total cross-sell. Each month, this company, a very recognizable pharmaceutical, sends out offers to customers of products they have never bought before. Total cross-sell. And we pick out the customers to whom they get emails or postal based on those who have, number one, a high likelihood to buy in the next 30 days because we're sending them something now, and they've got 3 or 4 products with a cross-sell index above a certain threshold. Well, a digitized, personalized postcard costs about 50 cents, and an individualized email, as I said, is about a half cent. I just put a penny in here for ease. The response rates are very high. The best customers that we know we're going to get money from, we sent the postal piece to, and this is, as I said, been going on every month for years. Excuse me, I am skipping ahead again. I'm sorry, but I want to go over this data. And my apologies, I have a very twitchy mouse here. So the customers who were getting postal pieces have been responding steadily at the 12 to 15 to 17% rate, and each 50-cent postcard is producing between $12 and $13 of revenue. It's been going on for years. This program generates money. And on the email, while the response rates are not as high, they're still very high, and even then those half-cent emails are generating several dollars per email. Now, one of the other pieces about this, there's a couple of points I want to make about this campaign. One is that it's cross-sell, so we're selling stuff that people have never bought before. And that means that we're expanding the marketplace for the company, and we're expanding the share of wallet that we're getting from the recipient customers. A second piece is that we're not burning out the customers, that this has been going on for 4 years, that response is steady here at these rates means that this is a campaign you can run again and again and again. It's just not a one-time kind of thing, but it's repeatable. You can keep sending people stuff and keep expanding their what they're buying. So this stuff really works. Relevance really works. And it was all too easy to go forward. And now sometimes these programs drive me a little bonkers. Okay, here we go. So I've been really focusing up to now on what we call the worm's eye view, down to the individual customer. But I'm going to switch over and go to the what I'm calling the bird's eye view. Here's a heat map of about 500,000 customers. And each dot represents an individual customer. We know who each customer is. And each dot has got 3 values attached to it. One value is their risk score. How likely are they to defect? And that's along this horizontal x-axis here. So the dots over here are customers who are more likely to defect, 70% probability, 80% probability. And the customers over here are less likely to defect, 10%, 20% probability of defection. The vertical scale is the value of the customer. So the low value customers are at the bottom and the high value customers at the top. So up here in this range, in this box that we're calling the loyalists, these are the high value, low risk customers. And down over here are the low value, high risk customers. Now, I said there were 3 values. The third value is where they were. What we're showing is a map of where they were 6 months ago. So 6 months ago, all the customers that were in this upper loyalist segment were colored green. All the ones that were in this nurturer section, also low risk but not quite as high value, they were colored blue. And now we can see where they've gone to. A lot of the green customers have moved down over here. You can see there's motion this way. And some of the blue customers have moved this way, but some of the other customers have moved in the opposite direction. This is a really fertile area for which you want to do, where you want to campaign. You want to get these customers who are changing and get them back where they belong. So this is a visual that shows what's going on, but the individual month-by-month migration reports showing which customers have moved are very useful for marketers. Now, another way to see the bird's eye view is through data visualization, and I'm going to show you some Datawatch visualizations briefly. We can't show you customer data in the visualizations. You'd learn too much about some of our clients. But we can show you what's going on by using our demo data set. We've got the Seacoast Pet Supply Company. They've got locations all over the East Coast. They've got over 800,000 customers. Their products are divided into 26 product categories, and those product categories encompass over 700 different item categories. And as I said, they got multiple locations. We're going to show you how revenue at risk varies by store, the revenue trends by store, and product patterns, and we're going to use the Datawatch visualization to show you that. And after that, we've got a really good offer. So I'm going to leave this for a second. I'm going to come over to the Datawatch screen, and here we're looking at some of the visualizations. So each dot on this graphic is a store, and the store's color is red, green, yellow, or orange, depending on how risky it is. The stores that are not at risk of losing revenue in the next year, and that's what we're looking at, who's going to lose, how much revenue they're going to lose in the next year compared to this year's sales. They're in green, and the ones who are likely to lose are in red, and the size of the dot is a measure of how much revenue at risk. So there's a lot of revenue at risk here, and there's not a lot of revenue at risk down here in Philadelphia. So the revenue risk percentage is pretty low, and the dollars are pretty low too. So that's one kind of thing that we can show you. Another piece that we can show you is how the revenue is going to come into these stores. We're going to look at a geographic view again, and we're going to look at the percent change in revenue and the amount of revenue that's going to happen in the future. So stores that are in green are going to grow their revenue, and stores that are in red are going to be losing revenue, and how much is going to be shown. I don't have to select them all. I could just do, say, the Middle Atlantic region, New Jersey, New York, Pennsylvania, Maryland, for example, and I could expand any of these charts and see what's going on. I can see where the revenue is at risk and which stores in particular are at risk. So you can, I'm sorry, I'm not talking about risk, but where the revenue is going to come from and where it's going to go. So that's another piece that we can do with the visualizations. And we can also look at, chugging along here, folks, because I'm aware of the time, and I want to make sure there's time for questions. We can look at it from a product point of view. If you remember that we had 26 product categories, and here the amount of dollars we're receiving from each category is proportional to the size. So this is the category professional apparatus. That's the biggest, as where the most of the revenue is coming from. This is second, and down over here in these 26 categories is trade fairs and crates and accessories. That's smaller. So that's where the revenue is coming from by product. We can get more granular. We can even move this out a little bit, and we can see within each category. Remember, there were 700 item categories. So within this professional apparatus, we could look at an individual category like tubs, or we could look over here at rapid, whatever rapid is, I'm not sure, stools and chairs and so on. You can go to one other category over here. This is the playthings, and squeakers are the biggest category in playthings. I know that squeakers are a big category because I buy a lot of squeakers for my dog who's sitting near me here, and whenever I tell something too fast into my trunk, it often lands on a squeaker I've got in my trunk waiting for my dog to do something really good in dog agility so I can give him a new squeaker. So I know about squeakers. Anyway, you can make it even more granular if you'd like, aside from skipping over the personal stuff here. And we can look it down to the individual store so we can see what products are being sold in what stores, what categories. We can tell really exactly what's going on. If we wanted to shift things around and organize it first by store, we can slide this over like this, and then we can see which store is selling the most. Up here is the biggest one, and this is that Philadelphia store with that big green circle around it. So I can then I can see what's selling in that store. You can do an awful lot with these visualizations that will let you see what's going on in your product line, in your customer line going forward. And obviously, you could also show a lot of the customer performance too. We're not doing that here. I'm going back to my slide deck. I've got just a couple of slides to finish up with. And we'll get back here, and we can continue the slideshow. And we can go forward, I think. Okay, so the conclusion is that all this that we've been showing you can be done without data modeling, without doing big data integration projects. You don't need data scientists. That's our line. We do the math, you do the marketing. We deliver actionable campaign result lists, what you send to each customer. So here's the list and here's the customer to send it to. We deliver scores for every product. We don't need personally identifiable information. And there's a very quick, easy ROI. So quick that we have some pretty good offers for you here. So let's see, we should get an offer. Okay, you send us transaction data. And free, we'll show you the kinds of things that you were looking at today. We'll analyze your data. We'll show you what the customer opportunities are, how much cross-sell opportunity, how much upsell, and we'll do data visualization of the kind that you've seen here with your data. Even better than that, we're offering to new customers, and this is a new customer offer. If you run a trial campaign with this data, we're going to charge you $5,000, but we guarantee that you're going to see $100,000 in revenue lift from that $5,000. You're going to see $100,000 in new revenue from the $5,000 that you spend, or you get your money back. Okay? Now, I'm not saying we're going to give you 20 times the revenue, but I'm saying we're going to give you 20 times your cost, and you're going to see a revenue lift. And if we don't do that, we're going to give you your money back. We've had this offer available to new customers for about 6 months now, maybe 5 or 6 months, and we have not yet had to refund any. So that's pretty good. We're very confident that relevance raises response rates a lot. And if you're not used to sending out individualized print or email, we have variable data publishing partners that can handle that. Looking at who's attending this webinar, I think you companies are working with printers and emailers who are able to do that. But I got to tell you, we have a limited space in our production queue, so this is a first come, first serve offer. And if you're first in line, we're going to be able to do it soon. If you're not first in line, it could take us a while to get to you. So if you'd like to do this, call or email me. I'm going to leave this on the screen. My email is here. My phone number is here. I'm going to be here this afternoon and the rest of this week. And let me know that you'd like to do this, and we'll start arranging for you to be able to get that kind of revenue lift. Erin, can you take over here?
I can. Thanks, Mark. So we only have a few questions. One of the first ones was during Mike Slother's demo. Was this done over the web, or was this with a FAT client?
The design was done with a FAT client, but very easily deployed to a browser. All I would do is save the workbook to the server, and then it becomes available to a larger group of people.
And I will jump in here, Mike, and say that typically the visualizations that we're doing for our clients are done over the cloud. The data's out in the cloud, and they can see the visualizations from their desktop.
Okay, great. Another question
and folks, Erin, if I could just interject here, folks, okay. if you want to ask any questions, there's a Q&A window. If you do go up to the top of your screen, there's a drop-down arrow there, and you'll see there's a Q&A option from that drop-down arrow. Okay, go ahead, Erin.
Sure. One question is that they can see the relevance of improved response rates, but what's the biggest hurdle that you face in doing an individualized campaign compared to a one-size-fits-all campaign?
No doubt the biggest hurdle is getting out the campaign list. It used to take us a day or so to do all the SQL queries to produce the list that gets fed to a printer or an emailer. We've eventually got around to automating that. That's now automated. And you can either do it yourself from within Longbow, or we'll do it, but it's down to less than 5 minutes. But that's the big hurdle that people have if they don't have the kind of tools that we've got. Getting the actual list out, the mechanics of it.
Okay. Kind of a question that builds on that answer. Where do you find that individualization and personalization don't work, and where do you find it works best?
Well, it works best when you've got lots of products and lots of customers. Where it doesn't work is if you've got a limited product set. For example, if you sell cedar swing sets, people are only going to buy that once, and if you don't have a lot of other stuff in your inventory, if you're just a cedar swing set, we're not a good fit for something like that. Big box retailers were an excellent fit for it. So a lot of products, a lot of customers, a lot of stores. The more data that you've got, the better our analytics are.
Okay. Another question is, he has been using RFM for a long time with reasonable success. can we use our RFM scoring for individualized campaigns?
RFM is easy to understand and fairly easy to do, but it doesn't come close to the kind of individualization that we can do. It's not bad on the high end of who your best customers are, though you should know your best customers. It's not too bad on the very low end who your worst customers are. It doesn't tell you much at all about the overwhelming majority of customers in the middle. The worst shortcoming of RFM is that it has no product information in it. It's just recency, frequency, monetary value, so you can't predict who's going to buy what, and let alone try to score them with probabilities of buying stuff. There's no product information in RFM. So if you're going to send one size fits all to everybody, you could use an RFM and you get reasonable results. But if you want to try to do individualized, RFM is really difficult to work with.
Okay. And the final question is, if we wanted to try this today, how soon could a campaign be out the door and in people's homes or inbox?
Well, that's really probably driven by how good you are at getting your data to us and getting it analyzed. We could certainly turn it all around in a month if you're efficient. The hurdles of getting it out the door quickly are just getting the right data set to us. We don't need a lot of different kinds of fields, but sometimes it takes a week or so to get that going. But we've turned it around within a month. That's say campaigns in home in a month.
Okay, and that's all the questions I have in the inbox right now.